Hello, this is Mytime Television exploring United States stocks. This video is being broadcast simultaneously through a partnership with Mijuan Television. In the United States Blue Chip Stock Analysis segment, today we'll be looking into a company called Amphenol. Its ticker symbol is APH. This company manufactures connectors and cables used in telecommunication services. Let's find out together whether this company is a high-quality company based on data, what its valuation looks like, its future performance, and its current stock momentum using the system provided by Choice Stock. This stock discovery segment introduces good companies as well as companies that are becoming promising. It's not about buying or selling stocks right now. That's not the concept here. If you get practical experience in how to look at things based on data, it will help you a lot later. Not just with the data we provide on our site, but also when you look at other companies or other firms, you'll be able to make your own judgments using the same concepts. I think it would be good to use it for that purpose. If you look at the stock price trend over the past year, actually Amphenol stayed in a box range for about 6 months, so the stock price barely moved. But in the last 4 months, it surged about 71%, so there was a period of rapid increase. So the stock price has risen so quickly in the last 4 months that you could call it a vertical rise. It would be good to pay attention to why this company has risen so fast and why it has recently been attracting attention in the market. As I mentioned earlier, this company provides communication solutions and extreme environment response solutions. When we say extreme environments, this is what we mean. For example, environments like outer space or areas related to the Department of Defense that deal with weapons or deserts or extremely cold places. Electronic devices need to operate in these kinds of environments, and connectors and cables also need to function properly. This company develops solutions to address those needs. But basically, if you look at it broadly, the company is doing these two main things. The connector part and the cable part. Connectors are the components that connect two things together, and cables are the parts that use wires to link things between those connectors. They serve the role of connecting two electronic devices together. So it's kind of like a road, right? You can think of the company as playing the role of a road that connects different points together. So the reason why this company has been getting a lot of attention and interest lately is exactly because of this. They're expanding their artificial intelligence data centers very aggressively these days, aren't they? Recently, if you look at companies like Meta, Microsoft, and Google, they're massively expanding their data centers. It seems like the infrastructure companies needed for expanding these artificial intelligence data centers are starting to benefit from this process. At first, the companies that benefited the most were ones like NVIDIA, and then companies involved in cooling systems for the servers themselves seemed to benefit in the first wave. After that, as more and more data centers started being built around, it seems like the equipment and other things needed for them have started to benefit as well. So I think it would be good to take a closer look at those companies as well. So as artificial intelligence data centers expand, the demand for these high-performance connectors and connector cables is increasing significantly. Among the listed companies, there are about 2 companies that make these connectors and cables. There are companies called TE Connectivity and Aptiv. These are also very large companies, but the difference is that, unlike Amphenol, TE Connectivity and Aptiv do not have as high a proportion of their revenue coming from the communication solutions business segment. In Amphenol's case, about 50% of revenue comes from communication solutions. In the case of TE Connectivity, they have more revenue from transportation solutions, and for Aptiv, a larger portion of their revenue comes from connectors used in autonomous vehicles. So when it comes to the expansion of artificial intelligence data centers, among these 3 companies, Amphenol is most likely to benefit the most in the connector and cable business. That's because about 50% of their revenue comes from that business segment. So among the 3, I think Amphenol is likely to benefit the most from artificial intelligence data centers. If you go to the homepage that Amphenol is running, you'll see here a list of products labeled for data center use. I took a screenshot of that. If you look at one of them, you'll see something like 0.4 mm fine pitch floating and so on. This product is a connector with new features that's often used in data centers and similar places. This connector is needed to transmit and receive electrical signals and such between boards. This connector requires boards to be inserted on both sides during assembly. The pins must align perfectly, but slight misalignments can occur. There can be slight misalignments, and with older technology, if things didn't align perfectly, it would either break or not fit at all. In this case, there's a technology called floating, which means it's slightly elevated or suspended like this. The idea is that it's floating like this, and to put it simply, this is how it works. For methods that aren't floating, the parts have to fit together exactly like a puzzle for them to align perfectly. When we were kids stacking blocks, even if it was off by 0, 1 or 2 millimeters, if you tried to force it, it wouldn't fit. Simply put, those are regular connectors. As for what a floating connector is, well, how should I put it? If you look at our MacBook or similar devices, when you plug in the power adapter, the magnet snaps it into place even if you just bring it close. You can think of it as being similar to that method. So this floating method is a connector that can handle slight misalignments between connectors without any issues and still make a good connection. And because this connector can handle high performance electrical signals back and forth, it's very effective. These components are being widely used to expand artificial intelligence data centers. So I think it's a company worth paying attention to. Is it a solid company? If you look at a score of 90, it's an excellent company. You might be hearing about this kind of company for the first time. Among all listed companies in the United States, our Choice Star rating ranks it 9th overall. The top 0.17% are considered excellent stocks. Compared to the previous month, it has risen up to 3 points. Future growth potential and stability are almost maxed out, indicating high growth potential and strong performance in other factors. In summary, NVIDIA presents itself as a company with significant growth potential. Even if you look at the scores over the past year, maintaining this score steadily from 87 points a year ago to now means that its growth potential is being sustained. You can see that it's a good company. Next, let's take a look at a few things through the financial chart. This is a chart based on the financial statements, and recently the second quarter earnings were announced. The announcement came last week. Based on the second quarter annualized figures, which means the sum of the most recent 4 quarters are used. Sales hit $18.8 billion, a 40% increase from the prior year, and net profit rose around 50% to $3.1 billion. That's an incredible increase. It's growing quite rapidly, and if you look at the charts, you can see that sales, operating profit, and net profit are all increasing at a significant upward pace. Especially in the second quarter of this year, the performance increased dramatically, causing the stock price to jump and move up to a new level. The operating profit margin stands at 22.4%, a significant improvement from the low 20% range in the past, now rapidly rising to the second highest level. On the other hand, the net profit margin is relatively lower compared to that, but since those ratios are staying consistent, it's hard to see any particular improvement in this area at the moment. However, the fact that the margin rate has improved significantly in the second quarter recently is a very important point. So, compared to the past, why has the operating profit margin improved? We can interpret this as either the cost ratio has decreased or the proportion of sales from high margin products has increased. Over the last 2 years, the company has acquired multiple businesses, considerably increasing its size through these acquisitions. In particular, what we need to pay attention to is that in the middle, on July 18, 2022, they announced the acquisition and completed it on February 3 this year. They acquired a company called CommScope. They acquired this company for $2.1 billion, and because of this acquisition, the expected revenue is increasing by about $1.3 billion. The earnings per share isn't growing much, but the size of the revenue is increasing significantly as a result of acquiring this company. The acquisition results were reflected in Q2 and will continue to be reflected in Q3 and Q4. So the reason why this year's expected annual performance shows such a huge jump in sales is because of the mergers and acquisitions. And since that part won't be there next year and the year after, it might look like the growth rate is a bit lower, but it does help with growth in areas like earnings per share and so on. Especially by acquiring this company, they've actually acquired a company that has the technology needed for future expansion of things like data centers. To put it simply, when processing data, there are these small computers called edge computers, and then there's the main artificial intelligence computer, the central computer. If the data is received and quickly processed here, the speed is much faster. But if it keeps going back and forth to the central computer, the speed becomes quite slow. These parts are quickly calculated on the small computer, and then there are roads that can quickly connect these to the main computer. The company that provides these wireless networks is called CommScope. So by acquiring this company, they aim to strengthen and expand the basic high-performance connectors and other aspects related to data centers that this company possesses. I think that's the right way to look at it. In addition, by acquiring companies in areas like industrial automobiles and medical devices, they are also expanding and strengthening other business sectors. You could say that they are a company building growth engines in these directions as well. Next, in the case of manufacturing, the inventory turnover days are quite important, but overall, since they are being maintained at a similar level, I don't think there's a major issue. If you look at the cash flow statement, a plus in investing activities and a plus in financing activities means that cash has flowed in. So since this company is raising funds through borrowings and cash is coming in, that's a plus. And then they're investing that money into tangible and intangible assets, which is why the investing activities are showing a significant outflow. That's why money is going out for M&A activities. Since this has mostly come to an end, from the next quarter, the cash flow from financing activities will likely increase steadily, and there's a good chance they won't spend much, or it could even turn negative. So you can see that there's no major problem with the cash flow statement. Growth stocks may fluctuate between positive and negative performance, so don't be overly concerned about short-term changes. If you look at the recent earnings per share and stock price, there were periods where the stock price went up and then dropped. This happened here, and after that there were periods where it surged by over 70%. That part is due to the performance of the companies that were merged earlier, and as actual deliveries and sales contracts for artificial intelligence data centers increased, the margins in that area became higher. The margins there are relatively high. So as those parts are being included, the stock price is reflecting it much more quickly now. Looking at the expected performance, this year's sales are projected to increase by 42%. This is partly due to the growth of the company's own products and also because of the companies that were acquired. And with the earnings per share surging by 60%, the stock price is likely to rise the most during this investment period. Now that we're already in August, it's important to consider how the market will evaluate this kind of growth next year. So in terms of sales, it shows about 10% growth. While sales themselves can't be considered rapid growth, if you look at earnings per share, it's showing stable growth at 12%. For these kinds of companies, as artificial intelligence data centers continue to expand in the future, it's very important to check whether this consensus data will have upside, stay flat, or be downsized. So since our data is constantly being updated in this area, it would be good to compare it with the screen you're looking at now. If you look at the valuation, Amphenol was actually one of the companies that was considered very expensive. In April 2025, when the stock price dropped, the entire index fell. At that time, it was the only company that dropped to about the middle between fair value and overvalued. Then the stock price went up again and stayed highly overvalued for a while. Recently, as you can see, the earnings reports have been very good, so the valuation jumped. At this point, as the stock price is undergoing a slight correction, there's a possibility that it could soon enter the fair value range, but it's not in that range yet. It's at an expensive price right now, so if the stock price corrects and enters this yellow zone, from a long-term perspective, it could become an attractive valuation range. So, I think we need to take a closer look at the valuation of these companies. When we look at the momentum since its midterm, we compare the 20-day and 60-day moving averages. So at this point where the green line broke through 61 in May, and as all three lines moved into a general upward trend, we can see that the overall stock price has continued to rise. Let's move to the side, take a look at the current situation and wrap up. You can search for APH or type it in Korean like this. On Friday, the stock price dropped by about 2% and recently a buy signal appeared. In the past, this company kept buying like this, and if you look at the returns, there was a 9% gain, a 50% gain, and it was sold at $62. It was too expensive, so I sold it when it started to drop, and then since the valuation was so high, I couldn't buy it again. Recently, a buy signal appeared, so now I'm holding it at this stage. So at this point, a buy signal has appeared, and I don't really know what will happen to this company in the future. It could hold up well and go up from here, or if not, it could go through another correction and drop. But if it drops during the correction, I might have to cut my losses. So it's good to focus mainly on the trading signals. That's why I'm showing you videos about finding stocks, but since the data keeps changing, you should refer to the trading signals because these opinions can change at any time, so I hope you keep that in mind. However, in terms of valuation, it's currently undergoing a correction and is coming down little by little, so if it corrects a bit more, the valuation could become quite attractive. If the index drops further and the valuation becomes very cheap, personally, even if it's not a trading signal, I think those who want to buy first will have plenty of opportunities to buy at a good price. You can refer to this part for the rest. I'll just show you the changes over the past year and wrap up. Looking at the growth, it went from 75 points to 85 points.
It increased, and as for monopoly power,
it reached 100 points.
It increased, and the finances.
Safety scored 90 points, while profitability reached 100 points, indicating an improved margin rate, as previously mentioned. As you saw earlier in the operating profit margin, cash generation scored 75 points. So overall, it's showing a very good form. That's how we can see it. So Amphenol is also a company that plays an important role in the expansion of artificial intelligence data centers, and I think it would be good for you to take a look at it through company analysis and available materials. If you found this video helpful, please subscribe, like, and turn on notifications. Thank you.